The Federal Reserve today raised the benchmark rate for the federal funds rate by another 0.75%. Now, if we take this into account with the increases we've seen throughout the year this year, this marks one of the fastest increases in Federal Reserve history that they have done this. Now, walking into this meeting today, we all expected that there would be a 0.75% rate increase. So there was no real market moving moment when that monetary policy was put out at 2 p.m. Eastern. The markets took it in sync because if we know it's going to happen, the markets have already priced it in. But as always, we always say the fireworks happen during the press conference afterwards, and we were right on that again today. Fed Chair Powell, if I could give that man any one award on earth, it would be the award of his ability to answer a question without answering a question. He was thrown a ton of questions, the majority of the questions surrounding whether they think they're raising the Fed funds rate too fast, too far, because there's going to be a lag. What I mean by a lag is inflation is going to take some time to come down, even if they held the rate exactly where it's at today. There's a lot of people out there saying that the Fed has already raised the rates enough. They need to give it 6 months at the current level to see if the inflation is going to come down, rather than continuing to raise it and push us into a very big recession. And Fed Chair Powell has asked this question several times. Where do they see the future rate increases going? And he really masterfully avoided that question, but made one moment where someone asked, do you feel like you've gone too far or not enough on these rate increases? And his response really sent markets into turmoil. His response was he would rather overdo the rate increases than underdo them. And that really sent the markets into a spiral, both the bond market, stock market. Unfortunately, mortgage rates are going to follow suit with the bond market on it. We've already received an alert to lock. We've already received several reprice for the worst from lenders. And this is what we're dealing with right now. We're dealing with a Federal Reserve that's driving 180 miles an hour, looking at the rearview mirror, and they're not seeing anything happen yet. So they're just hell-bent on going forward with these rate increases, no matter what pain it causes the American economy. And honestly, we shouldn't expect anything less. The majority of the Fed chairs or the Fed panelists, they've never held a real job in their life. The vast majority of them are not in tune with what's actually happening on the street in America. So the question becomes, where do we go from here? Well, I would say that the market's reaction this afternoon is somewhat of a knee-jerk reaction to Fed Chair Powell's comments. We typically see these knee-jerk reactions spiral the markets very far one way, and then over the course of hours, sometimes days, the markets will kind of come back to a center, and we don't expect the losses we've seen this afternoon necessarily to hold. Now, we're kind of in uncharted waters. That could be something that holds and continues to spiral. We don't really know. It's going to be something we're following up on, watching very closely, and we'll continue to update people. Where do we go for mortgage rates? Well, the big number that is going to be coming out on November 10th is the CPI report, Consumer Price Index, that's measuring inflation for the month of October. That's the report I've been talking about since March of this year as the report that we could see some meaningful gain of the Fed's work pulling down inflation. I'm not going to dive into why. There's a bunch of charts that I've gone through in the past that I don't want to bore everyone with that. But we have hope that the November 10th reading of October's inflation comes out with some good news. I've said it for forever, really. Inflation is the reason we see interest rates as high as they are. So even if the Fed is continuing to raise the federal funds rate, if inflation does come in check, mortgage rates will come down regardless of what the Fed funds rate is. So stay tuned. We've got a lot of data coming out on Friday. We're going to have the unemployment numbers from the Bureau of Labor Statistics. That's going to be a big market mover as well. And then next week, we have the elections on the 8th and the inflation reading on the 10th. We'll be doing a lot of breakdown videos on those as well. I appreciate your time today. If you need anything, reach out. South Florida, it's 954-222-EPIC. North Florida, it's 904-500-EPIC. The Panhandle, it's 850-500-EPIC. And in the Atlanta metro area, it's 770-525-EPIC. Thanks and take care.